Alrighty, welcome everyone. Welcome. Bring these guys in. Let me just turn off the waiting room.
And hi everyone.
And are you co-host already?
No,
No,
not yet.
okay.
No, I've just made you host, buddy.
I'll just make him co-host. All right, you should have ability now too, Steve.
Excellent.
Here we go, host tools. There it is. All right, everyone's starting to pop in a bit here.
And does everyone know your name in the room or just know you by ASX Trader?
Oh, you can call me ASX or Dave. Either
Yeah,
or, it
cool.
doesn't matter. All right, they're just popping in now. G'day. Awesome. All right, guys. So we might kick off because I'm pretty sure Steve's got lots to talk about, and I'm actually super intrigued to see it myself because I've been a quiet little admirer from the background for a number of years now. He posts some phenomenal stuff, and it's one of those things that I've been meaning to get around to look into more, but just been busy and haven't. And yeah, he posts some phenomenal pieces of information. And so what he's got is he's the founder of MacCorp Data Resources, and he's got 20 years in ERP software for the mining industry. And he turned $5,000 into 75,000 in 6 months just by researching the ASX resource stocks. So he solely focuses on ASX resource stocks. Okay, he doesn't go into anything else. And it's one of those things that we talk about is, jack of all trades, master of none. So he knows he does well in that. He's got a passion for that, and that's where he what he focuses on. So yeah, he's gonna go through MacCorp with us today, how it works, how I guess tell us a bit about your story, Steve, like how you came across it, how it all works, and then yeah, super intrigued to see what it's all about, bud.
Excellent. Thanks, Dave. And I appreciate the opportunity to speak to everyone. And thanks everyone for joining. So just a little bit about my background. As Dave mentioned, I've predominantly been in software ERP to the mining industry. And just to give you an overview of what that is, that stands for Enterprise Resource Planning Software. So in short, it's like an accounting financial system. Most mining companies start out with something like MYOB or MYOB or Xero, which is a basic accounting system to do, all your receivables and payables. And as project grows, into studies and, pre-development, construction and production, they need to improve their accounting system, if you like, to, manage the construction, their purchase requisitions, plant maintenance, stock control, any joint ventures, all that type of thing where, generally MYOB and Xero, the lower end of software systems, don't do it. So that's sort of my background. And when I was working at one ERP vendor, Pronto Software, back in 2015, I sort of started researching the ASX resource sector because that was predominantly what I was selling to. And one of my colleagues sort of recognised that I was doing that and asked me to go for a coffee with him. Now, this is a company with a staff of about 600 people, so, good sized company, and recognised globally in the mining industry. So anyway, he took me for coffee, and this guy's very conservative, and he said, I've noticed that you started to, look at investing in the ASX resource sector. I've done extremely well over a 10-year period. I'd no longer invest in it. And he said, my only advice is, I own 3 properties in Queensland outright profit through one data point or one criteria. And I said, what is that? And he said, any mining company that implemented our solution at the time, Pronto, he invested in them. And why is that so significant? Because when a mining company invests in ERP software, they're spending $250,000 plus and well in excess of $1 million at times for larger systems. And if a mining company is not confident about, their project going into production, they're not going to spend that sort of money on software. They, keep drilling and exploration and things like that. So it's significant. And I've sort of tracked that sort of side of things multiple times now over the last sort of 8+ years. And it's generally got a success rate of 66 to 75% in the green over a 12-month period, and with a return of about 120%. So yeah, it's one of the most low risk data points in the system. And I still manage that because one of my shareholders in MakCorp is an ERP software vendor to the mining space. So I still manage that data point, and I ring approximately 50 to 80 executives every week. I don't get to speak to them all because I leave messages, etc. But I might have 12 to 15 good conversations each week with mining executives. And ERP is one of the things I talk about along with their projects and people. So that's sort of my background. And so, I started looking to invest, and I did research, as I think anybody should, and sort of set out my criteria as to what I wanted to do. So I looked at commodities. Elon Musk was starting the battery sort of side of things, electric vehicle side of things. So I looked at lithium as a priority, along with a couple of other commodities. And at the time, I looked at got in PLS, Pilbara Minerals at 5.5 cents, and Altura Resources AJM at the same time. That was at 0.009 of a cent at that stage. And within sort of 3 months, lithium really took off. And those stocks really, they gave me 10 baggers. I was in other lithium stocks that didn't do well. But I feel, I always said, if I invest in 3, lithium stocks and one does well, then, I'm gonna be in front. But I was fortunate enough to be in a couple that did extremely well. And that was part of sort of my journey. And I've continued that sort of path as far as investing is, I'm always looking what's happening globally. And if you look at antimony over, the last sort of 3-4 months since China's put a slight ban on export of antimony, that's been very successful. So that's where you can really look at, TA and fundamentals, and working and using those sort of data collectively to perhaps, look at short-term trading. Because even though I look at antimony, it's actually been doing well the whole of 2024. It's one of the most successful commodities in this year, but obviously it had a very good run for 3 or 4 weeks from sort of mid to late August through to the end of September, early October. And I think it will have another trend because I think obviously with the US politics and other things that are happening around the world, it's sort of dropped a bit now. But as things pick up again in 25, antimony is certainly going to be a commodity, depending on what China does, that's very well required. And I look at supply and demand, and one of the reasons antimony is a really good commodity to follow is the US military need it for their weapons, as far as bullets and night vision goggles and things like that. So if China's putting restrictions on it, they're going to need to source their antimony in other places. So that's sort of what I look at. And as short-term traders, if you look at what's happening globally and obviously using your charts, you can pick up some really good trends early, and using the MakCorp data, and get in most of the trends that are happening or recognized in the marketplace. The MakCorp data shows you generally 3+ weeks ahead of the market. So if you're watching global things and trends with data, you can get in before the market recognizes it from time to time, which gives you a really good opportunity to make money over a 3 to 6 week period, using charts, using the MakCorp data, and using things that are happening globally. So that's sort of just some examples of what I look for and how you can look at opportunities, whether it be short-term trading and also using fundamentals if you're looking to mix it for long-term opportunities as well. So what I might do is I won't keep you guys long because it's a Friday night. So I just sort of want to give you some insights of the MakCorp data and the way I believe it can help you. So I believe I can share my screen now. So I'm going to share that, and let me know when everybody can see it. Can everybody see that?
Yeah, mate.
Yeah, mate.
Excellent. So there's multiple dashboards down the left-hand side. As you can see, I'm in the projects dashboard, and we've got a whole range of filters. And this is where, you can minimize or maximize your risks in the mining industry. And again, you can use commodity for risk. You can use project stage. So project stage can be anything from acquisition, exploration, discovery, which is sort of higher risk, right through to production, which is obviously lower risk depending on your investment criteria. So you've got fields like that to minimize and maximize your risk depending on your criteria. But one of the other things that we look at is project region, and you'll notice there's a few locations for projects, but in particular with the project region, obviously you've got very safe jurisdictions in Australia with Western Australia and New South Wales and things like that. But if you want higher risk with a really good return, then the Birimian region in West Africa is probably the most successful region in the world as far as average percentage gains. And that's because their gold is high grade. And if you look at companies like West Africa, you got Perseus and other companies in production now with gold projects. They're very successful, and you got sort of exploration and from exploration through to production in the Birimian region, depending again on your risk factors. So I'm going to use antinomy because I've already talked about that. So you'll notice there's two commodity fields. There's one which is just the general, what commodity do I want to look at? So I want to look at antinomy. And then I want to focus on antinomy. So priority, and that's the field I manage myself. Priority commodity is, a company and project is focused on antinomy now. And if I went back to mid-August, there was only, 6 to 8 companies that were focused on antinomy. And that's what you'll notice in the mining space. When there's a flavour of commodity, if you like, companies, all of a sudden go back to their old projects and sort of find out, have they got antinomy? What have they got? And they also potentially go and look at new projects that have antinomy in it. So if I scroll down, we've gone from 870 odd companies down to 33 companies focused on antinomy with 61 projects. And this tells you project location. So again, depending on your risk factor or using your charts, you can see, where potential projects are, or as far as high and lower risk, and regions. Now, the biggest regions for antinomy in the world, as far as the ASX Resource sector, are in New South Wales, which is the Lachlan Fold region, and the New England region, which is where LRV, NAG, and a few of those companies have done well since mid to late August, sort of to now. And if you got in those sort of stocks early, you can be up 100% plus with some of those stocks in a very short time, or depending on you might sort of only want to get 20 or 30%, and that's what you're happy with, and you sell out and you've made some profit. But that's the other area that the database is good for. When you're looking up different commodities, you can see what regions and countries they're more popular in. Where is the most antinomy? Well, at this stage, it's in Australia and predominantly in New South Wales. So again, as I mentioned, there's the priority commodity. We're focused on antimony. Now, out of these 33 companies, they're also got priority on other commodities. So, if you like lithium, then you can look at companies that are focused on antimony and lithium. Obviously, they won't be the same project, but that's the sort of mix that the MakCorp data can give you. So you're not putting all your eggs in one basket. Because as we know, at some point in the future, lithium's going to come back, and is now a good buying opportunity? That's the $1 million question. Or are these stocks still going to go, lower? Certainly noticed ASX Trader posting a few lithium stocks lately. I think CXO was one, and others. Then you've got different project stages, as I've mentioned. So again, this can minimize or maximize your risk factor. Scrolling down, we've got project activity type. So what's happening with the projects? What are they doing with them? So if they're doing field work, drilling, no project activity over the last 6 months is what that is. Drilling completed. So again, any of these visuals you can click on and just look at the stocks on what you've clicked on. So you can drill down all the way down as you're going down to focus on, minimal range of stocks that meet your criteria. This just gives you an overview of the project activity types. Full raw data. So this is all the project information within the project. It goes right across the screen from drilling, MPV, all the different bits and pieces about projects, and all the announcements that relate to all the data in the system. And with the raw data, I can export that straight to Excel. So if I like Excel and I want to manipulate the data further, I can. Now we're heading into drilling. This gives you an overview, obviously with commodities like gold, silver, platinum, palladium, germanium, gallium are all in grams per tonne, and the rest are in percentage. Now, these are some of the other commodities that you might want to keep an eye on over the next sort of 6 months. Palladium sort of had a bit of a rise. Germanium and gallium are other commodities that are going to be needed, particularly for the US military. So, this is where this data is good. If there's any global news on a particular commodity, you can quickly identify, the projects and companies that have got that commodity, and you might come up with a range of 5 companies or 20 companies, but it then allows you to go away and look at your charts with those companies in that commodity and work out, as far as whatever your trading criteria is, you'll find those stocks within your criteria based on the global news coming out. This gives you we collect 2 lots of drilling. The first one is by best grade. So we're just looking at the top 20 best grade results for antimony. And so it'll give you the code. It tells you we're looking at antimony, the project name, the area region that it's in. As I mentioned, Lachlan Fold is big for antimony, as you can see. Current market cap, the grade of the drilling results. So obviously, from best grade down to the worst grade, the intersect, and the depth of the best grade. We've just added this field, so it gives you the grams per tonne per metre of the drilling results, which means the grade multiplied by the intersect. The date of the drilling results and an overview, and you can also click on the announcements if you want more detailed information about that drilling result. Now, not sure about you guys, but just something to sort of keep in mind with, I'm not sure of your experience in mining, but I wouldn't consider 2 metre intersect as a good intersect. I probably want a minimum of at least 20 metres. because 2 meters is very small unless they've got consistent good drilling results. And that's what you're potentially looking for as far as longer term investing. Now, if I scroll down to the second table, again, we've got the same information, but it's by best intersect and grade of that best intersect and the depth. So this top one, GED, now, personally, I've got some question marks about the people in this company, which I won't go into. And that's the other important part, I believe, in probably more longer term investing, not short term, is looking at the people and their experience in the company. Now, that company was it was suspended for a long time. And, when a company's suspended, I sort of put a question mark about it. You can always give people a second chance, but, there's a question mark there. But very good intersect, 72 meters, and very good grade. Now, the other thing you can do is up the top, as I mentioned with the criteria, you might say, well, I only want to look at grades greater than 2 grams per tonne. Or if you're looking at copper, greater than 2%, or whatever the case may be. So you're looking at the best drilling results that you want to look at, because there's hundreds of drilling results, but a lot of them, may not be very good. So you want to be able to look at the best drilling results to help you, particularly look at the best companies. I personally like WA8. They are a client, so I'll disclose that. They're a client of MakCorp. They've got nearly a million ounces of gold. They've also got an antimony discovery. It's in a great region, WA, Western Australia. Market cap of only 35 mil. And if any of you are sort of longer term investors, there may also be a good opportunity for short term as well. So that might be one to put on your watch list to watch the graph for WA8. Because I definitely feel that's undervalued. They got very experienced people in the company, including the chairman, which has brought 4 projects into production over the last 20 years, including West Africa Resources, which I mentioned earlier. So it's one thing that I do is I follow people and their experience, because I think, if you've got somebody that's brought 4 projects into production over the last 20 years, and they're joining, other boards where the project's young, they're not going to jeopardize their credibility for no reason. They obviously see some sort of hope or opportunity by going into these companies early. So that's sort of something I look for as far as people and investment opportunities, is looking at the people. Scroll down a little bit further, and I'm not going to go too much more into this, but as I mentioned, this is the new field. So we've also got 2 tables now, which are the best grams per tonne per metre for drilling results by grade. So if you look at that, that's 604 grams of antimony just through this result. So that's a great result. You just got to sort of look at the risk factor as far as people and other things in that, in that company. Then as we scroll down to the next table, this is by intersect. So 2 tables by grade, best grade, and 2 tables by best intersect, which is the length of the strike of the mineralization of that commodity, whether it's gold or antimony or copper or whatever it is. Scrolling down a bit further, we just see some more drilling activity and how much there's been over the last period of time. NPV can be important. Again, you don't want to read too much. It's helpful information, but it's not always 100%, because commodity prices go up and down, and some of the NPVs, which is the potential valuation of the project, if it goes into production, what sort of return you're going to get. But if these NPVs are 1 or 2 or 3 years old, which some of them are, and something like lithium's gone down in that period of time, then the NPV is going to be wrong, because they've valued that valuation of the potential revenue of that project based on the lithium price when it was higher. Obviously, it's benefiting any gold company now that, did an MPV, 2 or 3 years ago, because the gold price has changed, and they would, they should be doing an upgrade MPV with the new potential revenue. So if I look at this one, we're looking at LRV, which has got a good resource of antimony, one of the biggest in Australia. So here we're reading that it's got a profit, an MPV profit of potentially of the project of 383 million. They've got a market cap of 162 million. Construction capex, which is to build the plant, is going to cost 73 odd million with a return of 114%. This just shows you who has got a current resource in antimony. So NAG will be coming into it now. We update the data, like it's updated every day, but I bring it into the system as far as the projects every Saturday. So NAG's just done a big update on, you'll notice NAG's here. I think it's 21 or 22,000 tons of antimony now. But as I mentioned, LRV has got one of the biggest. This information, if you're just fully, TA, won't really be pertinent to you. So that's a little bit about the projects, but the data that can be helpful to you. So obviously, like I mentioned, if there's a commodity that's flavour of the month due to some sort of global supply and demand opportunity, then this is certainly where the data can help you, because you want to quickly identify, who's in antimony or who's in palladium or who's in germanium very quickly, and you can use those codes then to do your charting. Now, the other thing I think is important to either minimise or maximise your risk is the financials, and there's two parts of that to look at. Now, all our data goes back to the 1st 2019, but we're only looking at the current quarterly 5B cash flow reports, and we're only looking at antimony. So we can see down here who's got money in the bank. Because one of the things is, if you look at, say, one of these companies on the right, and the chart looks good, you just got to be very careful, because more than likely they're going to do a capital raise in the very near future, and that could change the way the chart's going to look, because obviously 99% of the time when a company does capital raises, their share price drops. So this will help minimize your risk as far as aligning fundamental data with your TA data to make sure that the companies that are charting well in the ASX resource sector have got money in the bank. Oh, sorry, that's project spend. I'll drop down here, and we can sort by money in the bank here. Where are we? Just scroll over a little bit. Sorry about that. That was project spend at the top. And now we can sort by bank balance from low to high. And as you can see, my preference is for a mining company to have at least 2 million in the bank. 1 million at a minimum, but 2 million is sort of safe to think, they're not going to do a capital raise sort of in the next 4 to 12 weeks, depending on how long you hold stock for your TA. So, some of these stocks that have only got, a few 100,000, they're very high risk that they can potentially be doing a capital raise if they haven't already done so. Just keep in mind that when you're looking at quarterly data, that's sort of for the last 3 months. So capital raise and bank balances don't always align, because there's a period of time of up to 12 weeks where they could have already done a capital raise, but we do have that data in the system as well. And we're bringing some of those fields into here as far as the date of the most recent capital raise and how much they raised, and that'll be next to the bank balance. So you'll actually know whether or not they've done a capital raise during that up to 12-week period until the next quarterly cash flow report comes out. So that's that's certainly one field that I believe can help, you guys. You want to know that they got money in the bank, so there's no capital raise coming up in the very near future. Now, I'm going to go to one of the reports now. And this is we've got a lot of sort of charts here that you've probably seen throughout social media. But this report is the weekly, and it's the weekly performance of percentage gain loss. And you can look at that by stock, by commodity, by project area region, and you can get some good insights, which I'll sort of go through. We're looking at current week ending this week. So this is up of close of trade of yesterday. I'll be updating this in a couple of hours tonight. So all this data, as far as this week's data, is close of trade yesterday. So currently, Jindalee Lithium is the top performer this week at 56.6%. You got the open price that it started at the beginning of the week, and the current price of close of trade yesterday. You've got the priority commodities. So again, if there's a flavour of the month and something happens globally with any commodity, like say antimony, I can quickly search on antimony and seeing how that's performing sort of this week, or the stocks in it. That's the project location area region. That's the ERP, and that's mainly if you're longer term. I don't see any benefit that for trading short term. Whereas that's the companies that have spent a lot of money on ERP software as far as long term. Whether they're moving into production or they're already in production. Over here we have the total volume. So that's the total volume traded so far this week. So with liquidity, you can sort on this and say, well, I only want to look at volume of at least 2 million or more, because some of these 500 and odd thousand, 170,000 to me aren't genuine gains because the volume's so low. Now, not always, but there could be people manipulating the stock, as we're well aware happens. So this is sort of good data where you can really sort using volume. You got total shares on issue, market cap of close of trade of yesterday. This is the volume I use. So this is the volume percentage of traded for the current week versus the total number of shares. Because if you're using this volume and you're comparing, say, two lithium stocks, you might have one lithium stock that's got 1 billion shares, and you might have another lithium stock that's got 100 mil. So the volume will be distorted, where this gives you a really good insight as far as the true volume of each company and its performance each week. And generally, if I'm looking at that field, I'm going to look at a minimum of at least 1% turnover or more. Then this field, we've got share value or traded value of the week. Now, all we do to do this data is the current or the new share price multiplied by the volume. So again, I'll generally sort on this, and I might use at least 1 million plus, or sometimes 2 million plus, so I can really see the stocks that have got a lot of traction at the moment. There's not really any other fields over here that can help, so I'm just going to go through the visuals. So here we have all the major commodities and how they've been performing over the last 12 weeks. So the week ending date is the first column, the commodity is the second, their average percentage gain loss for the week. So what that means is there's 352 companies that have focused on gold that have traded this week, and the average is minus 4.38% per gold stock, and 66 are in the green, 67 with no gain, and 219 in the red. So as we can all see, this last sort of week has been terrible for the ASX Resource sector. There's no real good performers. The odd one there is. So again, you've got the total volume, the average volume, as I mentioned, number of stocks in green, no gain in red. But this is the column I use, as I mentioned on the first page, is the average percentage turnover versus number of shares on issue. So it really does. And when you look at the graphs, you can get a good insight of how, commodities have been performing. And, you might, as I said, like with Antinomy, where we got Antinomy, it had a very strong, you can see majority of those, if you invest in Antinomy stocks, over a 3-month period from sort of mid to late August, to late September, early October, you'd have done extremely well, because there's the average gain per Antinomy stock per week. So 8.09% average. So obviously, if you put $1,000 in every Antinomy stock, you would have been up by 8%, just over 8%. So really good indication of volume, average percentage gain, losses, etc. by commodity. Then we have the current week, which looks obviously terrible. And the only real commodity doing in the positive this week is manganese. Very unusual to see that sort of trend. There's generally at least 3 or 4 commodities that are doing well for whatever reason. But this last sort of week or two has been extremely tough, which I think is mainly due to the election in the US and obviously the couple of wars and stuff going on around the world. Next one is looking at project region or locations, but also the whole sector itself. So the first one here, we've got the whole ASX Resource sector and how it's performed over the last 12 weeks. And as you can see, outside of the last sort of week or two, in most, it's been performing extremely well, probably 7 or 8 weeks out of the last 12. And then you've got the average percentage gain loss for the whole sector for each week over the last 12 weeks. And all that relevant information that you've seen in the commodities. But what this is good for, I also have, I've got currently 90 stocks in my sort of watch list. And that's based on a number of things. I'm still fine tuning in that. That'll probably come down to around 50. Now, the reason I love to do that, and most of us have a watch list, is if something happens globally on a commodity, I've already done my research and I can react very quickly as far as, like, say, for example, Antinomy. When something happens to that again, or lithium, I can quickly just look at my list of 50, look which ones are in lithium, and I've done that in a matter of 30 seconds to a minute, and know which stocks I should be investing in because I've already done that research. Now, that might be good for you to do as well as far as your charting. Obviously, you've got watch lists and things like that. And I just think it saves a lot of time. Now, do I massage and update and take stocks out of that list and add new ones? Yes, I do. And that's my sort of 5 or 6 criteria as far as, what I put in a watch list. Actually, I'll go through that next. So I'll just finish this one. So you got all the regions and that there. But here's the overview of all the regions. And again, there's a sea of red. And you can even see my group of stocks, which is obviously called MakCorp, is in the minus as well. But in most cases, my average is higher than the sector itself because of the research I do. That's obviously not this week because it's a sea of red. And the only region that's doing well this week is Greenbushes. Lithium generally, because obviously there's a lot of lithium projects around the Greenbush. So then you've got companies this is by the most traded share or trade value for the week. Obviously BHP is always the number one. Now, what I'll be adding into this report is being able to filter by market cap, because I'm not sure about you guys, but I like to sort of look at stocks under 100 million, where there's an opportunity, to get from anywhere from 20% sort of 200-300%, depending on, my appetite, whether it's short term or long term in a particular stock. And then you got the bottom, less traded stocks this week, and most traded stocks above. Now, this is another field I think that can help you for two reasons. One, you got trending, and this is obviously where the orange is the high volume. So again, you can chart those high volume to see, is there still opportunity in those stocks or not? Or has it had its run and, potentially could drop back down again? What I look for, I'm more a contrarian type of investor. So I look at stocks that have either been unnoticed or that have gone backwards. And if we look at some of these stocks, with good reason, most of you, if you haven't heard, RSG is where the executives were held in Mali and weren't allowed to leave the country because they owe the government, I think somewhere around 250 million or more. So obviously their stock's taken a big dive this week. But is there an opportunity over the next week or two for that stock to turn around and maybe get a 10, 20, 30% turnaround? So that's where I look at sort of the stocks that have dropped. PDN's had some issues with their production on their project. Again, is that another opportunity for a turnaround? And this is where your graphs, as far as your trading analysis, will help you, with these type of stocks. Is there potential for these stocks to turn around in the short term? I think LRV, which is an antinomy stock, which I've touched on in the projects, is definitely worth putting on the watch list. So now this report's available on a daily basis. So, you can see daily changes. This one's weekly, we've got monthly, and we've got yearly. So you've got all the different, variables, as far as periods, whether you want to look at daily and look at how, what stocks are going up or down daily and match those against your TA charts, etc. Excuse me. So I find this sort of, this graph, one of the best for me as far as, potential turnarounds to make money short term. A1G, have had some good results. They're, as I mentioned, in a higher risk because they're in the Birimian in West Africa, but you can generally get some really good returns there if you've got an appetite for high risk. And then the last one is by project stage. I don't generally use this one much, but by sometime early next year, I want our platform to be able to identify the most successful data field over any period of time. So short term, it might be drilling. Longer term, it might be a project stage that, is more successful. Might be a region. Who knows what that might be at this point in time. But that's the sort of analysis that I want to be able to get, as far as what are the better low risk fields to help, manage risk factors as far as investing or trading. And the last thing I'll show you, because I know some of you probably want to get to your dinner and family. Now, for me, in my opinion, this is the most valuable report probably in the system, or one of, along with projects. But this shows you where directors, how they're getting their shares. Now, for me, if I'm looking to invest long term, not necessarily short term, it may or may not come into play, but definitely long term investing, I want to know that directors have put their hands in their own pocket and put their own money into the company that, they're helping run. So these are all the director trades over the last 2+ years. Now, what I look at is these fields here, and in particular these two. So, you'll see some values that are very low, you know, that they're almost embarrassing. You know, if I was a director and, you know, I only had a trade of, you know, $600 or $1,000 when they're earning, you know, big money, I'd be embarrassed to put a small trade on. So I generally filter and say anything equal to, you know, 100,000, I think is a good one, because then, you know, they're putting quite substantial, you know, money in themselves. So now I'm only filtering on the transactions that have a buy or a sell or director's fee. Now, director's fee means they haven't paid themselves, but they've got shares in lieu. So in other words, you know, this director here, Matthew O'Hara, he got paid $131,000 in shares rather than taking money out of the bank from the company, which I believe is also a good thing. But for this exercise, yeah, obviously you can look at sells. I mean, there's been some big sells. I think Bo, with the managing director and one or two of the directors, you know, sold a hell of a lot of their shares a few months ago, and that share's crashed since. So I'm just going to put buy here. And then, you know, we can see all the significant buys when they were. So you got the end date here of when they happened. And then you've got multiple transactions. Director new is the latest, and director old means it's an older transaction and there's been more recent, some type of transaction. But if I use one guy, for example, now some of you might fall off your chairs here because I really feel for this guy at the moment. But if I look at Rod Corp's, now, unfortunately, this poor guy has put in, let me just, format, and just put that there. This poor guy, prior to sort of, you know, 8 months ago before nickel crashed, you can see he's put a hell of a lot of money in. $11 million of, outside of, I think there was one small sell. He's put $11 million of his own money into this company. Today, that shareholding's probably worth no more than around $1 million because of the crash with nickel. So really, this is where you sort of need to be careful as far as commodities, and being aware of what's happening globally as far as which commodity, you know, because they all go in cycles. Yeah, uranium is, to me, uranium's one of the best commodities, but it's very difficult to get that timing right because there's such a short supply in uranium over the next 5 to 10 years. There's no doubt that you know, those stocks have got to do well because there's just not enough uranium around the world to supply the current reactors and the new ones being built. So it just doesn't make sense that a commodity such as that doesn't, yeah, it's had a very short term of success this year. But if you look at the last, you know, it's all dropped to where it was or lower. And you know, you look at it's had very little success over the last sort of 7 or 8 years. Now, all commodities, in my opinion, have their day. And again, it all relates back to supply and demand and what's happening around the world globally. But uranium's definitely one to put on your watch list because at some point in the next 2, 3, 4 years, those stocks have got to do well because, you know, it's just a commodity that's needed to keep up with the demand because there's just not enough of it around. And that's sort of what I look for. But again, you know, you look at poor nickel, you know, and it has had some good runs over the last 8 years, but, you know, you've seen some mines in WA close. I think there's 2 major ones that have closed this year. So very, very tough commodity, which is suffering at the moment, including, you know, poor Rod Corp's, which has lost most of his money so far. But yeah, they've got a very, very good project. So hopefully when nickel, you know, which it will at some point, come back, who knows when, is it a month, is it a year, is it 5 years? Yeah, no one really knows that till it starts to trend and you know, something happens where somewhere like Indonesia or Philippines put a ban on exports of nickel, that's the sort of thing you keep your eye on, where, you know, potentially nickel can have a good run. So that's sort of some of the data I think that can potentially help you guys with your TA, and also obviously fundamentals, long term as well. Is there any sort of questions anyone's got? Oh, it looks like there's a few there. Hello, any questions?
Do you have a handful that you really like the fundamentals of? Like if you were, and that way we can check the
Look,
charts and see if it aligns.
as I mentioned, I've got a list of 90 currently, but as I said, over the next sort of week or so, I will reduce that to, yeah, it may stay close to it, but I believe it'll go down to around 50. And that a big part of that will be this directors trades, because if there's companies where the directors put no money in, I won't consider them, because I think, you know, why as us as investors should put our money in if they're not? That's always my question. And I ask them, I'm very blunt, you know, when I'm talking to executives and their director shares are, you know, close to zero or very low, I ask them that very question and put them on the spot. And none of them really have any answers, but you know, that's where I look at, you know, the mining industry, and I imagine it's much similar to other industries. You probably got somewhere around a third that are lifestyle. You know, that they're on, you know, 3 or 4 boards. They're owning, you know, 2, 3, 400,000. They're getting free shares, so they don't really care. They're not working on behalf of the shareholders. And that's where things like project spend, these director shares, you know, looking at, you know, 2 new fields that we've added, and this has only been in the last week, is related party transactions, which Money of Mines brought to my attention. And that's where, you know, some companies are paying their own board members millions of dollars of to their external companies. And also travel costs is the other big one. So look, what I do is my list of internal, because I'm not allowed to give financial advice, as you'd be aware, Dave. But I supply my list of stocks to my clients, so you know, they can go and compare, you know, whatever else they want to do to look at those stocks.
Yeah, beautiful. Has anyone got any key questions at all?
Hang on, there's 3 new. Yeah, it's only the resource sector. And I think it'd be too difficult as far as trying to do all sectors. I prefer to do one and do it really well. However, we will be bringing on the Canada Exchange, or the TSX, and along as well as the London Exchange in 2025. And that will be really good for supply and demand of commodities. Yeah, I really look forward to being able, you know, copper's the big one people are talking about, as far as, you know, obviously uranium, as I mentioned, but copper's the other big one that's going to be low in supply and high on demand. So I really like to see, you know, what's coming through in copper. Now, it's one thing I can do in MakCorp as far as the ASX. I can look what's coming through with copper by project stage. Now, again, I think it was 42 million tonnes of copper on a JORC as far as the total ASX. But as we're well aware, and if you're not, you'll learn something here as well. Yeah, it's very rare, you know, maybe up to 10% of companies will get their project into production. So if you're looking at 42 million tonnes of copper coming through on the ASX in its current status, that relates to around 4 million tonnes of copper coming through. So, and I believe the amount of copper we need to keep up with demand was somewhere around 17, 18 million tonnes of copper. So they're the sort of things that you know, you've got to keep an eye on as far as that supply and demand. Yeah, it is a paid subscription. And if you look on our website, I don't offer the retail, if you like, or the investor subscription, because otherwise the companies will be subscribing to that. It's usually $14.95, but for this group, we'll be doing it at $9.95. So if anyone wants to subscribe, and that's generally a 12-month subscription, and we'll be giving 15 months for the first. So it gives you time to get used to the data. We can do some training, and then, as I mentioned, you get access to all the data and reports, along with my list of companies. What I call it, it's not companies to invest in, it's companies to research. Yeah, 995 for 15 months instead of 12, and it's usually $14.95, as I mentioned. So like Dave, I like to help people. I could have just continued investing and made money investing, but the main reason I started this business is to help the retail investors, because I think they get manipulated by the big boys, and that was one of the major reasons I wanted to reach out and try and help people.
Yeah, this thing will take, like, these guys haven't seen a commodity bull market yet. They probably got a little tiny taste for it in 2020 if you were trading then. We got about 18 months of a, not even, I think it was 12 months. But yeah, if you wait till you get
Iron ore was a big one then.
iron ore was a great, yeah. But again, it only lasted for a couple of years. They haven't actually seen a full proper. It's like alt season, but instead of just going for 12 months, it's going for years and years and years. So as you guys know, commodities are extremely cheap at the bottom of the cycle. When they do turn around and start moving, because we're still in that bottoming phase right now, and we know that during that phase, it's really like, are we bullish or are we not? Are we bullish or are we not? And they manipulate it down, keep it down. And when they finally let it go, it's just going to be amazing.
Well, I think gold's probably the safest commodity.
Yeah.
But I think, I've mentioned uranium, I've mentioned antimony, nickel, lithium, rare earths is another one. But silver, I think's the sleeper as well. I think
Oh yeah.
when silver starts to run, you could be looking at $100 an ounce plus. Be able to make some very good money in silver.
Yeah. Yeah, easy.
So again, it's just keeping an eye on. You doesn't mean you got to keep your eye on it all the time, every minute of every day, but you want to be at least 3 or 4 times a week, just reading what's happening globally with commodities. Something happening with China. Unfortunately, they're the dominance of the world as far as commodities. But if something happens with commodities, we've seen with antimony, we've seen it with rare earths, we've seen it with graphite, on other commodities. Germanium now is another one they're sort of looking at banning export. So this is where our data comes into play. When there's a ban or a real demand for a commodity, it's good to be able to quickly look at a list and identify, which ones you should be looking at, or looking at those codes in your charts.
Mm-hmm.
And training is, so if a group of you sign up, then we can organize a weekly catch up each week for the next 4 weeks, and obviously record that session as well for those that can't make it. And particularly because I generally do 4 1-hour lots of training, and that's so you'll learn a little bit, you'll have a play around, and then you'll have more questions, and then that way each week I can be answering your questions and teaching a bit more. And you never want to look at all. We've got over 600 data points in our system, and the best piece of or constructive criticism I was given approximately 2 years ago was, a guy's subscription was coming up, renewal, and he said, "Steve, I really love your data and your system." He said, "But I log in and I just get overwhelmed." And that was the best feedback I ever got, and that's why the training come into play. And I listened to his, investment strategy, and I was able to just supply him with 5 or 6 different fields that meet that criteria. And he's happy as Larry now, and he's finding the data much simpler and easier to use because he doesn't have to look at it all. So that's very important that, you don't necessarily have to change your strategy. You might, make minor changes, or you might see, 1, 2, 3, 4 fields that might help you, but it's only going to enhance your current strategy. If you try and change it too much, it can go wrong. I just sort of try and, keep to the original strategy, which I haven't changed much from day one. And that's looking at, as I mentioned, director shares and their buys. I look at project spend. I look at people's experience as far as the directors. I look at bank balances, things like that, I've been fortunate enough, as I mentioned, generally, like I said, I'm a contrarian sort of investor, and I look at the stocks that haven't been moving, but it's got potential because of it ticks all the boxes. And I generally look at that stock for, anywhere around 2 to 3 years, but generally somewhere in that 3 to 6 months, it has a good run. And then I just go, well, hang on, what do I do now? I wasn't expecting that. And, I make decisions of, do I sell half? Do I sell it all, or whatever? I think that's my biggest issue is selling like PLS. If I didn't sell PLS, I'd be a multi-millionaire now. But I sold it from around 30 cents, to sort of 50 cents. And, I got a 10 bagger with some of it. But yeah, if I'd have kept that right the way through, but that's the hardest thing to do, because when you see you're making, some good money, it's hard not to press that sell button and, but I also think not to be greedy, and I always think when I'm selling shares, that next investor's buying them, and they've got to try and make some money as well. So, and I don't understand people buying stocks at the top, and I'll use Chalice. Some unfortunate people bought that stock at around $10 odd, which I just thought, it's had such a massive run. I almost look at that as, I don't know how you look at it, but for people to buy stocks at their peak, it's going to, that's very high risk that you're going to make good money when you're buying stock at its highest point. I do look at opportunities, and that was like antinomy. When I saw that sort of starting, I quickly sort of did an email to clients to, keep an eye on antinomy. And I've had probably around a dozen ring me to thank me for that, because they made good money short term, very good money. Any more questions? You can use it. It depends on your criteria, but you can certainly use it. When I sort of find a stock that I want to research, I just go back and look at those sort of 5 or 6 points that I have for my investment criteria. Is, have the directors bought any on market or participated in a placement? I look at their spending pattern over the last 4 quarters. Have they been spending money on the project? If they haven't, is there a good reason why they haven't? I look at the people, their experience. Have they taken projects from early stages through to production? Now, to me, there's 3 types of directors in here. There's lifestyle, which I've mentioned, and there's strategy, which is someone like Klaus Elkoff. Now, AVZ's another stock I did very well in early on. I got in that at 1.6 cents. Very, very high risk, because it's obviously in the DRC. Now, I did my due diligence. I was given a tip on that. So I researched Klaus Elkoff. And then in his last 20 years in the mining industry, He's only ever gone into companies for somewhere between 12 and 24 months. He's turned the companies around, from being poor companies to half decent companies. He might have brought in a new project, etc. So, I saw that, and I said to my inner circle or my clients that, this is high risk, which it is. It was extremely high risk. I said, but you're only looking at this for no more than 12 to 18 months because Klaus will resign. And I went back to the guy that gave me the tip, and I said, this is a good tip potentially. I said, but it's only 12 to 18 months because Klaus won't hang around. And he said to me, no, Klaus is going to stay in this stock till it goes into production. And I said, well, if he does, that'll be the first time he's ever done that in the history of his last 20 years. Anyway, about 14, 15 months later, Klaus resigned, sold all his shares. Everyone was bagging him on social media, and I replied to that and said, if you do your research, you would have known that Klaus doesn't hang around, and he's done nothing wrong. He's stuck to what he does consistently for the last 20 years. So, again, a lot of people made some really good money out of that. I looked at, it was very high risk, and from 1.6, I looked at somewhere around 8 to 12 cents at the time as a very decent return, because the higher it goes, the more risk there is. And that's where most of my clients sort of got out. But there were some that, put in, one put in 25,000 and sold in the 20s. So, did extremely well. I couldn't have done that. I would have been too nervous. But yeah, everybody's different and everybody's strategy is different. So it's always good to stick to your strategy and learn, where other things may or may not be able to help you without changing it too much. The filters are very good in the system as far as being able to identify. If I go back to the projects, and I just changed the commodity projects, and I'll change it to gold, and I'm doing this for a reason. I'll take off antinomy. Come on, there we go, gold. You only need to click that once and get rid of antinomy. This is where the system's really good. Now, I look at grams per ton. So if we look at gold, you've got a lot of companies. So how the hell do you find the needle in the haystack, or the better ones to look at? So down here, you've got the drilling results. So I look at the grades, and like I mentioned, I look more at the intersects, because I want good intersects with, and I look at a minimum of 2 grams per ton. So I'm not going to see the really bad grades. So already that's gone from 433 down to 152, with 202 projects. Now again, I can sort by, if I want to minimize my risk, as I mentioned, WA8 is a really good one to sort of put on your watch list. So if I look at the Murchison, which is where WA8 is, so straight away you can see I've gone from 870 odd stocks to 433 down to, I forget what that last number was, down to 21 now. So now I can really start to look at those drilling results and I can look at the best grades, but like I said, I look at the best intersects. So here, I can see the best intersects, and WA8 is in there, 19 meters at 4.94 grams per ton, which works out 93 grams per meter. But you've got other stocks there. I mean, obviously it's going to be difficult to get in somewhere like RMS, which is a Remelius, which is a producer. Again, you can look at market caps. So I can go back to the top and just say I want to only look at market caps of 50 mil or less. So, you're only looking at the range of stocks that meet your, filter that meet your criteria. And that's what I love about this, because you can filter on, 2, 3, 4 different filters and really get a select few stocks and to then go and input into your TA system to see if there's any potential there for short-term trading. So yeah, very, very useful to use the filters. Any more questions on that? And BMG sort of, sometimes, I'll find a stock that I've never really noticed, if you like. Like BMG, that's sort of only come to my attention in the last couple of days, mainly due to this new field at 332 grams per meter. That's extraordinary. So that's what I'm going to do some research on over the weekend as far as director buys, their experience, project spend, those sort of things, just to make sure, it is a worthwhile company, and is it low risk or high risk based on those few different, criterias. Spartan Gold's a great story in the Murchison, which is the old Gascoigne company, and that's gone from nothing to, I think it's a $2 billion company now. I wasn't in it, unfortunately. I took 1.2 billion, but I think it went up. I think it's gone up like 40 times or something, over the last sort of 15 months. So, $1,000 in that 15 months ago would be worth 40 odd thousand today. So hopefully that's giving you some good insights. And as I said, markets are crazy. I agree with you, but one day they can be hot and the next day they can be bloody cold.
I appreciate you coming on, Steve. It was really interesting. I absolutely loved it.
Thanks, everyone. And any sort of feedback or questions, I think you got my email. If you haven't, it's steve@MakCorp, MakCorp.net.au. And I'll answer any questions. But for those of you interested for the $9.95 deal, be good to sort of get that done over the next week and get some training organised if that's something you're interested in, and do a couple of group training sessions. I always think it's good to get multiple people involved, because everybody's got different thoughts, and we can all learn from each other.
Awesome. Thanks, buddy.
Thanks, everyone.
We'll chuck your details in the chat again for anyone that needs it.
Excellent.
Thank you.
Awesome.
Much appreciated. And have a great weekend, everyone.
Take care.
Good night.
Cheers. You too.
Thanks, Steve.
Bye. Bye-bye.